This trade that we did on the first day of March is my favorite thing to do. If I had one trade to be able to explain to you what we do in our trading program, this would be it. So, following the previous day's sell-off here, early on March the 5th, we started down to the downside in the S&P 500 cash index. And I got long in here the call options at about a 50 to 61.8% retracement of this move from support up to resistance. We're still, however, we didn't take out these highs, and we are above, obviously, the support. So we're still within this wide range, just about in the middle, a little bit to the upside. So I wanted to establish myself from this pullback in here, a long position, with the idea is that if we get a reaction up here, not taking out these highs, not blasting out, but just a normal reaction to this move to the downside, this correction, that movement would enable me to finance a strangle. So I'm long the calls, I'm long the puts. The question is, which way is it going to go? We have resistance here at 1520, 1521. We have support here at 1514. I have support down here at 1490. And then I also have resistance up here at 1541. So it's a great way to position ourselves in the market within this tight range. We're established in here. We got a profit going on this one, which will finance the risk of this position. So if it were to blow out in either direction, we take the opposite side off. So if this market were to violate the support and go back down to 1490, we would stop out the calls underneath this low. If it were to take out the 1521 to the upside, we would stop out the puts. And we would still have a profitable position because we're financed on this strangle from this initial move, and we locked it in here. Following this move, we had a nice move up, so at very little risk for a very short period of time. I established myself a position in the market, a strangle in this instance, which is what I try to do most often, with a position that's financed by the market. Try to do this with the futures. There's an extraordinary amount of risk associated with that. You can do it, but you're taking on a whole lot of risk, which can catch up with you. With the options, you can ride out these huge bars and really be in a position to make a substantial profit as we did here. So I would love to see you subscribe to the service, and what you get is exactly what you see here. A video presentation showing the support and the resistance lines for the day and what we're looking to do in either direction. With whatever it does, we have a plan in place that when it hits certain conditions that I describe, we send out an alert. So when you get the alerts, you should know exactly what they represent and why, as we discuss here. And I usually like to see the overnight action from the overnight markets. I like to see the futures open in the morning and then send it out before the open outcry market opens for the stocks. So we have this trading plan in place coupled with the real-time alerts, so that you can see how and why and specifically what options we choose and what deltas we choose to participate in this kind of market action. This right here makes up the bread and butter of what we do.